One man controls the two most valuable bets in modern business. SpaceX, freshly public, is worth about $1.77 trillion. Tesla, on the open market, is worth roughly $1.3 trillion. Together, that is more than $3 trillion tied to a single founder. But here's the strange part. Almost none of that value is what these companies sell today. It is a bet on what they build next. This is that bet, told entirely in data. Start with the rocket company. SpaceX was founded in 2002, and for years it was a private gamble that nearly went bankrupt. In June of 2026, it listed on the Nasdaq at a valuation near $1.77 trillion. Last year, it took in about $19 billion in revenue, flew 170 orbital launches, and now operates more than 10,000 Starlink satellites, all of it built by roughly 13,000 employees. Now the car company. Tesla was founded a year later, in 2003, and today it is worth about $1.3 trillion. But notice the contrast. Tesla's revenue last year was almost $95 billion, 5 times what SpaceX earned. It delivered over 1.5 million cars, deployed 46 gigawatt-hours of battery storage, and booked nearly $4 billion in profit. On paper, Tesla is the far bigger business. So put them side by side, and the paradox jumps out. Tesla earns 5 times the revenue of SpaceX. Yet SpaceX is worth nearly $500 billion more. Look at the bottom line. For every single dollar of sales, the market values SpaceX at about $94 and Tesla at about $14. Both are priced far above any ordinary company. The question this whole film is really asking is simple. Why? The answer starts with what is actually happening inside each business right now. Tesla's most recent year tells a story of engines pulling in different directions. Revenue slipped about 3%, its first annual decline ever. Car deliveries fell 9%. Profit dropped almost in half. And yet, one number went the other way. Energy storage jumped nearly 50%. The car business is cooling, even as a newer business quietly catches fire. SpaceX shows the same pattern of a business reinventing itself. Back in 2022, launching rockets for other people was its main income. But Starlink, selling internet from space, grew far faster. By 2025, Starlink alone brought in over $11 billion, more than the entire launch business. The rocket company had quietly become an internet company. In both firms, the engine that pays the bills tomorrow is not the one that built them. Which brings us to the heart of it. Neither of these companies is really priced on what it sells today. The cars, the rockets, the subscriptions, those are the track record. What investors are buying is something else entirely. They are buying a forecast. So let's look at the forecasts both companies are asking the market to believe. For SpaceX, the growth story is Starlink. 5 years ago, it had almost no customers, a tiny beta with a few thousand users. By early 2026, it had crossed 10 million subscribers worldwide. That is the kind of curve you almost never see outside a viral app. And SpaceX wants to push further, beaming signal directly to ordinary phones, in places no cable company ever reached. The satellites going up are really a subscriber machine. So where could the money end up? Goldman Sachs sketched what SpaceX might earn by 2030. And the largest projected engine is not rockets at all. It is artificial intelligence and orbital computing, estimated near $322 billion a year. Starlink is projected near $144 billion. Launch, the original business, just $8 billion. Remember, every figure here is a projection, not a result. But it shows where the trillion-dollar price tag comes from. Underneath all of it sits one machine that simply has to work, Starship. The largest rocket ever built. It is designed to carry up to 200 tons to orbit in a single, fully reusable flight, at a stated target near $100 million a launch. NASA is already a customer, committing nearly $3 billion for a Starship to land astronauts on the moon. If it works, it is the foundation the entire forecast is built on. Tesla has its own quiet engine. While the headlines argued about cars, its battery storage business exploded. In 2022, Tesla deployed about 6 gigawatt-hours of storage. By 2025, that had grown to almost 47, roughly 7 times larger in 3 years. These are giant batteries that store power for the electric grid. It is now the fastest growing part of the company, and one of the few numbers still pointing sharply up. But Tesla's real valuation rests on three bets beyond the car. In Austin, its robotaxis now drive with no one behind the wheel. It is promising a purpose-built robotaxi, the Cybercab, at a target price near $30,000. And it is building Optimus, a humanoid robot that Elon Musk says could one day ship 1 million units a year. Each of these is a target, not a product line yet. But together, they are most of the story the market is paying for. Just how much of Tesla rides on these bets? By one estimate from Morgan Stanley, roughly 60% of Tesla's entire value is tied to robotaxis alone, not the cars it sells today, but the self-driving fleet it hopes to run tomorrow. Strip that away, and what is left is a car maker whose sales are shrinking. That is the gamble baked into the share price. And it is a gamble, not a guarantee. And that is the thing about every number we have just seen. They are forecasts, bold ones. The robots, the orbital data centers, the driverless fleets, none of them are fully real yet. The gap between a confident forecast and a hard fact is exactly where the risk lives. So now let's look at what could go wrong for each company in turn. Start with SpaceX's biggest current strength and its coming challenge. Today, no one is close in space. Starlink has more than 10,000 working satellites in orbit. Every rival combined, Europe's OneWeb, Amazon's Kuiper, China's 2 state networks, has only a few hundred. But each of those rivals has filed to launch thousands more. Amazon alone is spending over $10 billion to catch up. The lead is enormous now. Holding it is the hard part. And SpaceX's own numbers carry a warning. For all the dominance, the company as a whole lost money last year, nearly $5 billion in net losses. Only the Starlink division actually turns a profit. The rockets, the new AI arm, the relentless building of Starship, all of it burns cash. SpaceX is betting that scale will eventually flip those losses into profit. But today, the most valuable company of its kind is not yet a profitable one. Layer in the other risks, and the picture sharpens. In its flight tests last year, 3 Starships were lost. The rocket the whole forecast depends on is still exploding. The IPO valued the company at about 94 times its sales, one of the richest multiples on the market. And around 3/4 of its launches simply carry its own Starlink satellites. Impressive scale, but a business leaning heavily on itself. Now turn to Tesla's risks, starting with demand. For a decade, deliveries only went up, from 500,000 cars to over 1.8 million. Then, in 2024, they fell for the first time ever. And in 2025, they fell again, to about 1.6 million. For a company valued like a hypergrowth startup, the core product is no longer growing. That single bend in the line is the crack beneath the whole story. Part of the reason is sitting in China. In 2025, the Chinese maker BYD sold more pure electric cars than Tesla, about 2.3 million to Tesla's 1.6. The company that defined the electric car is no longer the one that sells the most of them. Tesla still leads on software and self-driving. But the days when it had the electric road to itself are firmly over. And competition has a price, literally. To defend its sales, Tesla cut prices again and again. Watch what that did to its operating margin. In 2022, Tesla kept almost 17 cents of operating profit on every dollar of sales. By 2025, that had fallen below 5 cents. The margins that once made Tesla look unstoppable have been squeezed to a fraction. Growth slowed, and profitability followed it down. The pressures are stacking up. Across Europe, Tesla's car sales fell 28% in a single year, squeezed by an aging lineup, cheaper rivals, and controversy around its chief executive. In the United States, regulators opened a safety investigation covering more than 3 million vehicles over its self-driving software. And the federal tax credit that made its cars cheaper to buy expired in September. Several tailwinds, all turning into headwinds at once. And both companies share one final risk, the same man at the center of everything. Elon Musk runs SpaceX and Tesla at the same time, along with an AI lab, a social network, and more. Tesla's shareholders just approved a pay deal for him that could be worth $1 trillion, the largest in corporate history. His attention is the scarcest resource in this entire story. When one person is the strategy for $2 trillion companies, that is a strength and a single point of failure. So, how big can Elon Musk's companies actually get? On the evidence, both are real. Both dominate their corner of the world, and both are genuinely profitable in parts. But the trillions attached to them are not a verdict on what they have built. They are a bet on what they still have to build. The companies are here today. The valuations live in the future. And that future comes down to a short, hard checklist. For SpaceX, Starship has to fly, refuel in orbit, and one day reach Mars. For Tesla, the robotaxi has to scale to millions of rides, and Optimus has to ship at real volume. Hit those, and $3 trillion might look cheap. Miss them, and it looks like a story the market told itself. This is the data. What happens next is the bet. We'll be watching the numbers.